Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We've got some earnings to discuss. We've got some ratings to discuss. We have the Zone conference as is being discussed in the chat right now. I think that starts around 10:30 if memory serves correctly. So that'll be a spot for trading action today because the fund managers are going to want to pump their ideas at the Zone conference later on. Our guest today is Jeremy Schwartz. He's the director of research at WisdomTree ETFs. He'll join us at 8:35. Joel, what's doing this morning in the S&Ps?
We're in the green by $1.75 at 26.73 and a quarter. Had a nice open, like nearly a $10 higher open, but peaked right away at 84.75. So 12 handles away. That's a bogey on the upside. On the downside, pre-market low 66.50. Not a lot there, but we got a huge level underneath. Let's just call it 26.60. Monday and Friday's highs right in that area. So that holds. We're going to have a good week. We're going to rally back into the 2,700 handle. We take out 26.60. We could be back down at that 2,600 range. Crude in the red by 18 cents, finding a little bit of a trading range here between 67.5 and 68.5. High of the move made on Friday at 69.55. Gold in the red by 8.20, 13.30, 10. Silver under $17, down 2 cents here at 16.96. And don't look now, Dennis, but your Bitcoin, the futures, up $370 at 8,940, making an assault on 9,000. Dennis, let's bring you in here.
I heard that Bitcoin Cash went up like 80% last week.
It did. It had a big...
Props to BK off of fast money. Do you think he can move the Bitcoin Cash that much? Because he came out about a week ago saying that he was buying Bitcoin Cash, and now I hear a week later it went up 60% last week. Is he the driver?
Who?
Is CNBC the driver? CNBC must have a lot of cryptocurrency because they're always pumping the cryptocurrencies, aren't they?
Who was it you said was bullish?
Brian Kelly.
Oh, Brian Kelly.
BK.
He
came out with his thing like about a week ago. I can remember on Fast Money saying I'm buying Bitcoin Cash here. I think it's breaking out. So props to BK because it did. It went up like 60 or 70%. I just wonder if he is that much of a driver that he can cause and kickstart that rally. Obviously, once you get it going, then just the ball starts rolling in the right direction and can keep going up. But do you think he was the catalyst that kickstarted all that on Bitcoin Cash?
He could be. I wouldn't argue against it. I mean, he's on.
They got influence. Like we see it on the stocks all the time. They mention a stock and, they do this pitch, the fast money pitch, and that stock will move 1 or 2% just on this fast money pitches that these guys do. So we know there's a lot of retail. It's a retail driven market. And obviously that's a show that a lot of retail traders watch. So I just wonder if he's the one that kickstarted that Bitcoin Cash rally. I don't follow the crypto market close enough to really, if there's other catalysts, and obviously Bitcoin, a lot of cryptos were up last week, but that went up 60% or 70% last week. Seems like an outlier to me.
Yeah, well, we'll see if the rally. Bitcoin, obviously 10,000. That's a big level. We're $1,000 away from that. Much different characteristic of a rally. We've talked about that. It's just kind of slow and steady. People are, there's sell orders there. It's not like last time here, but whatever the case may be, a nice move here, knocking on the door of 9,000. Dennis said the heart of earnings season here, and obviously after the close on Friday, there probably wasn't much action, but we do have some earnings today to cover.
Yeah, let's start with Hasbro here, and man, this just seems so obvious, painfully obvious, that I'm kicking myself here this morning because Hasbro comes out and obviously doesn't do well, and they blame Toys R Us. I'm like, we all knew that. The market knew that. They had already hit Hasbro down. Ahead of the report, they were selling it off too, and now they're really bad earnings, and they hit it down another 7% here or 8% here now as it continues to leak. Spencer, give us the details here, but I'm shocked that first of all, I'm shocked that nobody else wasn't as painfully obvious to everybody. as it should have been. So disappointed myself even that I wasn't short going into this report because 8% was sitting on the bone there.
Yeah, they missed badly. 10-cent EPS versus a 34-cent estimate. Sales of 716.34 versus $819.4 million. So they missed the sales number by $100 million.
The stock got hit ahead of the report, so obviously everybody may be nervous. So maybe the smart money was already selling it. I don't know why it ran up in the end of April there and to the middle of April for 4 or 5 days. Maybe this is the overall market dragging everything up, but the smart money was realizing, hey, this is going to be a good opportunity to sell ahead of the Hasbro report. I definitely wouldn't want to have been long going into the report. I just wouldn't have thought that it would have got hit that hard, but then the earnings were really bad, so maybe it makes sense.
Kids don't play with new toys anymore, Dennis.
Well, there's a whole other argument there too. I mean, they got so many multiple problems they're having at Hasbro, and I'll tell you, like I've said before, my 3-year-old would much prefer his iPad, which we don't allow to happen as much as he would like. He gets a little bit here and there, but if it was up to him, he would never play with the toy. He would just play with his iPad. So there is definitely a trend there. And then you get into the teenagers and you get everybody else. Or even the older kids, they don't want the toys as much. They don't want to go play around. They want to play with the iPads and the iPhones.
Does Spencer have his own? Does he have his own?
That's not a good sign for Hasbro or Mattel.
Does Spencer have his own?
Yeah, he does.
Or does he use yours?
My old ones. Yeah, we've got all just little games on there. Like it's all. Then you got the YouTube Kids. You can set to preschool, so he watches his different videos. There's like this baby bum videos where they got little cartoons, and they're pretty cute. You got to watch some of this stuff. Don't just hand it to them. You kind of got to monitor a little bit because YouTube Kids, it's a nice app, but they say right on it, they can't watch and review every single thing that goes through it. So sometimes they get something and I'm like, I don't like that. So you can block different videos from him seeing. So you got to still monitor it, but. I mean, they love the iPad. It's amazing at 3 years old how well they can work that thing, almost better than me.
Pre-market low 75.30, and you're not far away from that. So potentially some more work to do on the downside. Only 30 cents off that pre-market low. This stock has held up a lot better than Mattel. We can just alert our traders here that you did have, when's the last time you traded in the lower 70s? Last time you did that was in March of 2016, and you had a 60 or a 75.51 low, and we just ticked 75.57. So if you've been holding out for that short to be covered since March of 2016, you're there. Nowhere to hide after that. Your February 2016 low is 68.60. So it's going to be hard to find a bottom in this today. And on the pre-market show, we were talking about Mattel trading at levels it hadn't seen since late 2000. So,
I mean, you had the rumors that Hasbro was going to buy Mattel, or potentially there was other suitors. I actually shorted into that. Remember, I covered way too soon, as always, a scalper blood in me. But, looking back in hindsight, it's always 2020. Stock got to $18, $19 on those rumors back at the beginning of January. You can see the big spike up when it went to $18.88. Here we are 3 months later. Dust settles. Stock's making a new 10-year low here. I don't know if anybody's coming to the rescue, and if they don't, that's big problems for Mattel. Maybe Hasbro comes in at a certain price and just buys just because of the synergies and looking to cut costs and do what they can. But rating is on the wall here for these toy makers. When you see the Toys R Us going out of business, there's a reason behind that, and it's the fact that the kids aren't buying as much toys as they used to.
Hasbro has the Star Wars stuff, right? Is that the reason?
Yeah, and that helps them. I mean, Hasbro, they have the licensing for the Star Wars toys, and that helps them because it's Star Wars. I think, for sure. I'm pretty sure it's Hasbro.
That's it. Held up better.
I think Mattel's Barbie, right?
Yes. Hasbro is Star Wars, and Mattel is Barbie.
G.I. Joe, that's Mattel too, right?
Do they still make G.I. Joe toys? Those are too violent. They don't make toys like that anymore, do they?
I think they do.
Do they? No, I don't think so. I don't know if they do. They don't make violent toys anymore. You see the cartoons nowadays? There's no they don't even have Roadrunner or anything. You can't have any violence. It's all just holding hands and love.
All right. Well,
that's why the kids are all they get and they get older and they love their video games and all stuff because they weren't exposed to any violence for the first 10 years of their life. So now get all excited when they see anything like that. But I mean, when I was a kid, I had cap guns, I had everything. I turned out okay. I didn't turn into a mass murderer. So I don't know about, taking all the guns and Maybe there's something to it, but I don't think there's any problem with like a cap gun or stuff like that.
Yeah.
But
You
they
have
seem
your
to be, and all the cartoons we watched when we were a kid, they were all violent. I mean, look at the Bugs Bunny and the Road Runner. You know how many times? Well, not Bugs Bunny, the Road Runner, and who was he always getting? Wile E. Coyote? Was that who it was?
Yeah,
He kills like 25 times every show.
He gets all those anvils dropped on his head and everything.
Joel watched that like crazy. He didn't turn into a serial killer.
I know that I know that Dennis had his official Red Ryder BB gun. Of course you did. I can see.
I did.
See
You
you
knew
right
that,
now.
eh? I did. I had the actual, like, I think it was the anniversary edition.
Yeah.
I went outside and I wasn't outside shooting all the animals. I liked animals. I still like animals. I was just shooting my targets and stuff, but I had fun with it. I had fun with
All right.
I wasn't years old. I don't think I was 12.
Let's get back to.
We really digress. Once
Let's
again.
get back to the market.
All right, so we covered one stock here in 10 minutes. Let's jump over to Halliburton earnings. They reported here this morning too. It seems like these oil stocks, they pop up a little bit and then they give them back to. It's already starting to leak here. What's the report, HAL?
41 cents in line with the estimate. Sales 5.74 billion versus 5.75 billion. So fine, but nothing too great to write home about.
Ran up in the report. In the long run, when you look at oil stocks, the oil reports always seem to be just noise. And what I mean by that is they move with the price of oil. And if you bring up the chart of, the crude, and you bring up the chart of all these oil, and for the most part, and you look at the betas, you can kind of predict where they are longer term. So it just seems like when you get a big move off an earnings report for an oil stock, it's almost always a fade because they seem to want to retrace back to where oil prices are. Now, this is not moving here at all this morning, and oil is obviously trading just flat here. Actually, no, oil's down here. I didn't realize that. Oil started leaking, so Halliburton started leaking here too. They just chase oil price around.
Boy, oh boy, you got a great level. If we can rally another buck, I'd love to see what happens here at 52.50 area. That's the area of a triple top. Definitely a institution targeting that area. Nice volume over the last 3 days. So no continued rally until we clear 52.50, a buck away from that. Coming back on the downside, you did have a big range, a big pre-market range. Your pre-market low is 51 even. Dailies 51.08. That's a big level. If not, you're dropping into the lower 50 handle. We have a triple bottom. So nice technical setups in here on Halliburton on this earnings Monday.
Also reporting earnings for Kimberly-Clark, KMB. That stock is trading up in the pre-market. So bucking the trend, because we've seen a lot of these consumer product stocks getting hit hard on their earnings reports. They anticipated that because they hit hard to KMB all the way down to $100, almost even on the kisser on Friday. Well, it got down to $98.92, but closed at $100.03. Getting a little lift. Spencer, details.
Yeah, they hit a 52-week low this morning before the report. Then the report came out at 7:30, $1.71, which is in line, and 4.7 versus $4.6 billion on the sales.
So good enough, and because they were all expecting, obviously after the Procter & Gamble report, they were expecting the worst here, and they didn't get the worst, and that's why you're seeing a lift. So if you look at this and say, well, I didn't beat why it's up, well, because the expectations coming in were very low. It's all about expectations going in the earnings reports. That's what matters more than anything. That's why I get a little relief pop here if they didn't do as poorly as Procter & Gamble did. KMB thoughts, Joel, would bounce kind of off $100 critical psychological level there. But, a lot of overhead supply here as well.
So you hit 98 before the number came out, huh? Someone was leaning the wrong way? Because I see we went down to 98 even. Now
the pre-market?
Yeah. Yep. What time did it come out?
7:30.
Okay. So that was after. Yep. You hit 98. Boy, this is a scary looking daily chart, folks. I mean, right here, 102.98. That was your high from Friday. 101.76. That's where you're currently trading. Pre-market high did sneak over 103 to 103.95, but we're really back under it. So I'm keeping an eye on that. If we don't clear 103 off the hop here, this stock could be going back down to test the close. 100.03. Friday's low 98.92, and your pre-market low down at 98 even.
Jump over just one other stock that was reporting this morning. We're going to get a ton of reports tonight, too. We're going to hear from Google, Whirlpool, Ameritrade, Rambus, Barrick Gold. Ton of reports coming. You're coming to the heart of earnings season. Big reports this week. But let's go to Alaska Air. They were your fourth company that reported here this morning of note. ALK details as they're trading up in the pre-market.
14 cents versus 12 cents on the EPS, 1.83 billion in sales, and that is in line with the estimate.
Stock getting a lift here, no pun intended. We saw who reported there last week and they got a lift. Was it Delta?
Yes.
Honey, United.
Yeah.
No,
got my
United.
goldfish memory going. I thought it was Delta. Was it United?
It was not. It was United.
United reported, and then they got a lift. And a lot of the airlines have been on a relief pop here for the last week. So Alaska with a nice pop ahead of this report, a few days of consolidation. Thoughts, though, now, Joel? I mean, we had the consolidation here. They start to look a little bit better. These airlines are so damn trendy. I mean, they start going down, and they seem like they go down for a month, and they start getting a lift, and then they seem to like they lift for a month. But just look at this, and you know, here we were back at the beginning of April, $57. Now we're $66. So I feel like you're chasing it a bit here now. No?
Absolutely. Easier to give you your major resistance here. You had a high last week at 66.89. You had a high in the 67 handle at 67.22 on March 16th. So you're 70 cents away from major resistance. So I'm keeping an eye on the 67 for a potential breakout, maybe getting near 68 or 69. Coming back on the downside here, safely above yesterday's low at 65.01. So keep an eye on that if you're shorting it for a potential target. Your 2-day low and your low from your 2-day low is 64.61. Another low in the lower 64 handle. But first things first, let's keep it green on the session. Friday's close 65.39.
Alcoa is getting hit hard here in the pre-market right now. I did not see the headline on this, but I'm just looking across the board and obviously seeing a lot of, well, Alcoa is leading the way here down this morning, AA, but I'm seeing U.S. Steel going in the red here now.
What's going on?
Seeing a lot of metals here trading very weak this morning. Somebody said something somewhere because this is not going to be down 6% here on just nothing. Did you see a headline here going, Spencer? Down $4 now.
There's the one thing that I'm seeing that the U.S. may relieve Russia sanctions if a certain person divests control. That was from Bloomberg. I don't know.
The tough headline. I'm looking too. I'm just looking here in the last minute. I'm not seeing a lot jumping out at me. I do see the same headline you're talking about, Russian sanctions.
Yeah.
That might be it.
I don't know.
Aluminum prices are down though, so obviously it chases aluminum pricing itself. So I'm just wondering what the driver is to drive aluminum down here this morning. Maybe that's it. I think you might have found it, the Russian thing.
All right. Oh, deep in the red on the lows of the pre-market session, 55, 54, down 447. Who cares about the good earnings a couple days ago? Dennis, didn't I order you to short like 10,000 up there at like 61, 62?
Good call.
And
maybe I should dump out of my portfolio first.
And what about we could go back and talk about GE at that $15 level on Friday. So, but anyways, I don't know. You want to find support in this? You go to your daily chart and $54. I see 3 lows in the 54 handle: 476, 441, and 427. I'd wait for that. If that doesn't come pretty soon, you may have to be buying this on the upswing. But definitely negative news here. Trying to find support in the 55 handle. Pre-market low 55.50, but I like it in the lower 54s a little bit better.
Let's talk about the overall market here because, we saw the big run up in Alcoa. The market had been doing pretty good until Friday. Friday was an ugly candle for us. If you just want to even look at the SPY, I mean, Friday was an ugly candle. You can blame option expiration. We can blame the third Friday of the month. Sometimes some funny things happen there. But now that I see, some major, you're seeing crude get hit here hard this morning. When we first started the show, it was almost flat. Now we got crude trading down almost 1%. And now you see the metals all falling off. You start to see some of your leaders here that have been your leaders really starting to take it on the chin. It makes me think we could get some follow through. I know the S&Ps are trading higher here this morning. I know there's a few catalysts where you got some nice ratings changes where Caterpillar is getting upgraded. We got Merck getting upgraded, Verizon, ExxonMobil. The analysts are trying to help here this morning, but I see Alcoa down $5 here now. I see a lot of other stocks starting to go into the red. I mean, the Qs are still trading in the green, so you got some of your tech still helping. Maybe, Google earnings tonight could help out, but I'm a little concerned here that this rally could fade, this little rally we got this morning.
And I mean, Apple is trading in the green here by $1.18, but that was your culprit on Friday. The analysts seem to be ganging up on the negative side here ahead of the earnings report. Apple lost $7 on Friday, and that was after losing another $5 on Thursday. So that's a big move. So that was your big catalyst. Street now looking for good reports from Apple. So that was your drag on the downside. I was hoping to see this thing right around 160, the lower 165 handle, or upper 164. There's a ton of lows there, but now you're trading up $1.21, a little bit of source of strength in the market. So not sure you're going to get that. The close on Friday, 65.72. So that was your culprit in the market on Friday.
Yeah, and that's concerning when you start losing some of the tech leaders. And it wasn't just Apple. A lot of your other tech stocks started to have a rough day too. A lot of them going into the red. I mean, Netflix, which has been, just consolidating here for a while after, having a great report and really popping up, is starting to feel a little bit heavier than it did. I know it's traded up a couple bucks in the pre-market, but you got a tradable area here with 326, two lows from the last couple of days, 326.77, 326. So take out 326, you kind of get down, I guess you got the 323 low too, but really you start to get in that gap area here and it starts to feel a little bit heavy. Amazon had a rough candle on Friday too after having a great run last week. Friday's candle wasn't pretty. It is trading back up 11 points in the pre-market, but I kind of feel like they've had such a run in the last week or two that you might see some selling into this pop here this morning. So I just seen that theme kind of across the board. So I'm a little bit scared to come in here buying stocks this morning. I feel more apt to sell, the ones that are popping, to sell into this.
And I don't know what got us like a 12-point higher open last night. At 83, and then boom, you went another $1.75 and turned around immediately. So
I mean, it had a good headline from North Korea over the weekend. This happened late Friday night, which might have been a little bit of catalyst where North Korea, I don't know if you have the headline in front of you, Spencer, I'm going to butcher it because I'm just going from my memory, but saying that they're going to stop missile testing and close up a test facility as well.
Yeah, you know what? I saw that headline and my first thought was, yeah, right.
Well, yeah, you don't have to believe it, but I mean, at least, that's the signs that, hey, this guy's not playing hardball here anymore, at least with the talk. So it sounds like Trump is actually winning that. So, all of a sudden nuclear war isn't a fear. Not that nuclear war was ever a significant fear here, but I think last year we had some fears when they were launching missiles over Japan.
Yeah, that's true.
So it sounds like those fears have at least, gone at least to the back seat here for a little while. Especially if they're going to stop testing missiles. So I think that's a catalyst to help the market a little bit. But I think there's a lot of catalysts here that I'm a little concerned. We've had the run, and I didn't like, obviously, the Apple action at all last week. I start to see some other stocks starting to give back some of the gains here this morning. It makes me think if I'm a portfolio manager, I'm looking to maybe lock in some of those gains as well. So you look at the stocks that haven't fallen yet, and maybe those are ones that I might lighten up on.
Trading range. We got to the top of the range, exceeded it by a little bit, and now we're kind of pulling back into it. So long-term expanded the top of the trading range, but now coming back in, and still some big earnings reports to come out. Got Google after the close today. You haven't
lots
heard
of
from
catalysts
Apple.
if the earnings can be good.
Yep.
But so far in this earnings season, they haven't been really buying them. The Lam Research report was pretty good, besides Netflix. And Netflix really popped on its report, but the Lam Research wasn't that bad. And they murdered that stock. And really, the IBM report, who expects, IBM? I can't believe that they murdered it that much, because IBM never blows it away, and they still murdered it anyways. And then you start looking at all the banks. Goldman kind of killed it. They did really well at a report, and they beat that stock up. And we saw that with all the banks. But the banks actually had pretty good numbers, and they beat them up for it. So there's been a theme already developing that unless you're really blown in, and the metrics, Netflix absolutely blew them away, that they're selling them off on the report. So the ones that are just beating, it's not good enough. You got to absolutely blow it away. And that's, sometimes a difficult hill for a lot of these stocks to climb. So I'm concerned. You look at Google tonight. I own Google in my invest portfolio. I still like it long term, but it's had a little run up. We're up 100 points here since the beginning of April. So you think, well, if they don't blow it away, the stock's going to leak. And we know Google can have 50-point moves off the earnings reports there. So it's going to be a big report for it tonight. If Google doesn't blow it away, I think that could, be trouble for the tech stocks too. So there's some concern out here. more concern than we had a week ago today.
Yep. Google. I'm looking at the GOOG. No L here. Double top just under 1100. It's a 1093 area. If we go into rally mode, which that's 20 points away. And for the GOOG L, double top is right about that area too. A few bucks higher. 1094, 75, 1097, 51. Let's just go back. That GE action on Friday. Dennis, did you play that thing going through 15 and get shaken out at
Would have been
15?
good, eh?
Yeah. Were you
The
watching
15,
it
we
there?
talked about that level up there, and it did come off. And, I feel like I made a trade on GE, and I can't even remember now. I make so many dang trades, as day trades, and I can't remember if I traded it or not. I'm actually long it right now just as an overnight trade because sometimes you get those follow through. Mm-hmm. And I was hoping we might catch an upgrade or something this morning. Maybe Johnny come lately, kind of like the report. So I was hoping over the weekend somebody might upgrade it. That did not occur, but the stock is still trading up here in the pre-market. So, up 0.76% with the market only up 0.21. So that's a nice little pop there for GE despite no upgrade. So I probably sell that though now. I was just trading it just because I thought we might catch an upgrade over the weekend, and that didn't happen.
You couldn't quite fill the gap. Opened at 1494, and then all those sellers came in at 15. All the breakout traders were 01, 02, 03, 04, boom, 05, and they ran out of buyers. Couldn't fill the gap, got down to 1534, settled at 15 or 1454. Huge volume day. I think what's real important for GE, if you think it's turning to quarter, is to hold these gains, for a day or two, because how many times have you seen it have a decent quarter or decent news and then, give it back within the next few sessions? Also, I told folks what I'm keeping an eye on. We haven't had an up month in GE since February of 2017, when you added 11 cents only, and every monthly candle has been red. So a week away. Let's see if we can get a green candle on GE and at least have some technical basis to lean on here if you're going long.
Let's jump over to a few other stocks here on the list, and it's ratings parade this morning. So a lot of bullish ones. Let's go to the Caterpillar getting upgraded here this morning at Citigroup. Stock is trading up $2.40 here in the pre-market. Got hit on Friday. A lot of stocks hit. Stocks getting the losses right back here with the upgrade. See some overhead supply here too, though, so I'm not getting that bullish. Sorry, Citi. I don't know if I'm going to jump on the bandwagon here because we did have multiple tops, 157, 156. On the Friday's candle just scares me on so many stocks. Now we get the pop back in it. I just think there's people that are nervous and saying maybe I'm going to book some of these gains. So I think you might see some people actually come in and sell into this rally here in Caterpillar.
And you have a wall of resistance, as you mentioned. As first thing I was going to say too is all those highs in the 157 handle. This is going back to March, mid-March. You had all those highs, 157.28, 157.45. But I even see some resistance developing ahead of that. I just want to alert our traders that you do have a double top and a cat from Thursday and Friday, 156.33 and 156.14. So yes, you are getting an upgrade. Yes, you're trading up $2.45, but you haven't even taken out Friday's high or the double top from Thursday, and then could run into more problems in the 157 handle.
I want to say on Caterpillar real fast. I'm looking at our Benzinger Pro ratings calendar on Cat, and holy cow, is there a lot of green on there. A lot of upgrades, a lot of buy ratings. The only downgrade of note since the start of last year was a Deutsche Bank downgrade to hold that they've maintained since then. But everyone on the street is bullish on this guy, it seems like.
And here's the problem with that. When you see everybody bullish, there's no other, and of everyone covering, and you can have new initiations, but if the majority of people that are covering it have a buy rating on it, well, there's no ratings to help you in the future because they're already all at buy. So if stocks are so weak, then they all got to chase. We know we talked about it on the show, analyst chase price, the ACP strategy. There's a strategy in itself just looking when everybody's already got a buy on something. There's no way left to upgrade it. So we know, and I would love to see a paper on this, but I think there's, a good chunk of individual moves, if you were to add them all up, or from upgrades and downgrades, a good chunk of it. We know the major catalysts are earnings. Obviously, that's your number one catalyst. But, and then you've got macro factors too. But upgrades and downgrades move stock. Stock gets upgraded, moves up 2%. Stock gets downgraded, moves up 2% typically. So you add all those up, and when you get 3 or 4 upgrades in a year on a stock, well, that's 8 or 10% that it's popped. And, a lot of times that's your return for the year. So you've really got to follow these analysts. And when they've all got a buy on it all of a sudden, there's no way left to upgrade it. So there's, a concern there too when everybody's so bullish.
I agree. And let's see what happens here. 156 and change. That's your double top. And the cat, let's look at the deer. How's the deer been trading as well? Maybe moving in sympathy, flat. Oh, man, this thing is trying to get off the mat. And this has just a wall of resistance at 151.5, 152. So charts don't look that great for all the bullish analyst action here. More cat than in deer, but we'll keep an eye on it. 152, that's your major resistance in John Deere.
Going to rate our imbalances that just came out.
Sure.
Twitter, 71,000 to buy. GIS, which you said got some love in Barron's. There is somebody buying this morning, 57,000 to buy in General Mills. The food stocks have really been out of favor here for a long time. General Electric, a little fall through 155,000 to buy here this morning. So some institutions coming in this morning here, liking the report and buying here on the second day. Bank of America, 184,000 to sell. That was going opposite to the financials because the financials are trading up a little bit here this morning. TLT was trading down. It's always good for the banks. Just looking around, all the other ones are pretty small. Square, 25,000 to buy. I don't really see much else jumping out to me. Wells Fargo, 60,000 to buy. It's kind of a note, but let's go to Alcoa and just see. Oh, and Alcoa actually doesn't put 19,000 to sell. So AA is 19,000 to sell, which is small yet, but it's down $5 here now.
Oh
I mean, this Alcoa is getting serious here. Down 8.5%. It's given back basically its entire gain from last week, which was a big run up there. Concerning, although now you're starting to come into that 55. Now I don't mind it at 55 here because I feel like you've come down a lot just for a day trading bounce. Maybe it catches a couple lows in here. This was where you had the little resistance there formed, Joel, back, for 3-4 days. You had highs around 55. If you subscribe to that theory, old resistance becomes new support. This would be the level where it might bounce.
Yeah, and we did talk about earlier that multiple lows in the lower 54 handle, 427, 441, another one at 476, which we've already taken out. Your pre-market low is 54.55. So especially if you held this thing short through the report and saw it pop to $62, and now only 3 days later, getting it in the 54 handle. Let's see if some buyers emerge here in Alcoa.
Market rally still continues here. So let's go back to ratings. We got 2 minutes here before our first guest. Merck catching an upgrade at Goldman Sachs here this morning. It is trading up over the psychological $60 level. I could tell you that's going to be the level that's, I think it's going to have at least in some initial trouble there. There was a huge institutional seller there that was selling over 100,000 shares. I'm sure they're probably going to be there again. So that liquidity becomes active at 9:30 when the market opens. So that's the first hurdle. Can it get over the 60? I know you're going to say I was trading 60.50 in the pre-market, but I don't think it opens over 60. I think it could open at 60, takes out that seller, then maybe it can continue. But Goldman is obviously very influential. So I think it can do it today. Take out the 60, but that's the big number for it. Full disclosure, this is one of the biggest positions in my investment portfolio.
59.96. That was your high on April 17th. We are trading through that level now. Trading at the highs of the pre-market session, trading 60.23 high. Just not huge volume yet. So let's see if you get a chance to take out those sellers. If you're looking for a gap fill, you got a ways to go. If you sneak into the 59 handle, the close or the high from Friday was 59.27. A couple other highs in that area as well.
All right, it's
jump over
8:34. Nope, I'm going to take it, Dennis. To 8:34. We're going to go to our guest today, Jeremy Schwartz. He's a good one. He's director of research at WisdomTree ETFs. He was just in Asia. He's really good on like the macro stuff. So we're going to pick Jeremy's brain in a moment. We'll be right back. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick on now. Jeremy Schwartz, he is the Director of Research at WisdomTree. Jeremy, how's it going this morning?
It is great. Thanks for having me on.
I follow you on Twitter at Jeremy D. Schwartz, and I noted you were posting some very elegant pictures last week, or maybe it was the week before, from your trip to Asia. So I want to start off with that area of the world and your thoughts on those markets. I guess let's start high level. Give us your high level view on the Asian markets right now.
Yeah, I think, you can't help but escape all the discussions on a global basis today. Asia is front and center of the major macro issues of the day. Long run, you have this tension between the U.S. and China, and that is guiding, a lot of the big picture commentary, where China is an up-and-coming rival to the U.S. They're going to become one of the world's biggest economies, or the world's biggest economy, really, in just a short order. And so you have the U.S., Trump versus Xi Jinping, and how all these trade discussions are going to play out. And that's front and center in people's minds. You have Japan, you have North Korea. All these discussions are all interrelated. And so from a high level, I take one of the big stories this year has really just been, the last 2 years, has really been the weakening dollar. That is front and center of all the trade discussions. You've had Kudlow come in as a strong dollar advocate, as a promoter of free trade generally, although he's saying it with China, that we need to do something to negotiate in the best interest of our companies in the U.S. The intellectual property discussion, that's a really important discussion. But I think long run, I do see good opportunities in a lot of these Asian countries. China as a consumer, they do want to, they're shifting from an infrastructure and investment-led economy toward the consumption-led economy. And so you could question, really, is it in the best interest to dramatically devalue their currency, which a lot of people are worried about. That was one of the big risks 2 years ago, was China going to devalue the currency? I don't see that really as their interest. But I think that's the major story of it is, how are these trade negotiations, how is the political situation with North Korea going to play out? That's topic number one.
I read a great article over the weekend. I don't know how related it is to the markets. Maybe you can tell me. I don't know if you read it I believe it was the Washington Post, about how the massive gender imbalance, specifically in China and India, is sort of affecting life now, and it's driving up property values. Savings rates are going through the roof because everyone needs to start buying houses, and it's having all sorts of unintended consequences. I was wondering, if you read that story, and if not, we can move on. But it was very interesting.
I saw the same thing on Twitter, and honestly, I'm not the expert on the gender imbalances, but I do know that is a real issue from China's one-child policy. That was a real issue. How they balance all these social dynamics over time is going to be a really important question for them over time.
All right. What about the rest of the continent? So we talked about China a little bit. What about some of the more the more emerging or frontier markets there?
Yeah, I'd say, one of the areas we tend to be overweight from a asset allocation perspective is emerging markets. When I look at PE ratios around the world, emerging markets are selling at discounts to the U.S. You take a broad emerging market index at 13 to 14 times earnings. The U.S. is, depending on if you look at trailing or forward 12-month earnings, but you get higher valuations in the U.S. Now, in emerging markets, and this also goes to traveling in Asia and China, one of the big stories is going to be the addition of China A shares to a lot of the emerging market indexes going forward. Later this year, they're starting to get added to the MSCI indexes. We've added them a lot to our indexes already in more meaningful ways. I think that's going to be a big story. But you do see very different exposures in the emerging markets index generally versus 10 years ago. 10 years ago, it was all commodity based. A third of an emerging market index was commodities. Today, the up and coming tech, we hear about the FANG stocks in the US. It's Alibaba, it's Tencent, Baidu. They're much bigger shares. I mean, you get almost 30% of tech in emerging markets today. So even when you look at the valuations and say that's at a discount to its past, it's really a different look and feel of what the broad Asia and emerging market indexes look like. And so I do believe there's an underlying shift happening in those markets that the valuations are fairly reasonable. And as a long-term secular trend, I would be, overweight emerging markets.
Yeah, well, just looking at the emerging markets even here, I mean, they've underperformed for the last 5 years, especially. I mean, the U.S. markets have been dominant. I mean, you just look at what the U.S. markets have done compared to some of these other markets, and the U.S. markets have really outperformed. So when you come in here buying U.S. stocks, you almost feel like you're chasing a little bit after the last 5 years. But you look at these emerging markets, even looking at like the EEM or something, and obviously maybe there's some currency effects in there too. But I mean, the last 5 years, if you look at the EEM, we were down. We were around $35. Now we're 47. I mean, we really haven't gone up that much here. So are these markets that have been lagging? Do you think there's a play there to start focusing maybe some of the attention here then?
No, absolutely. So when I look, the last 5 years, I see something like 800 basis points a year. I see gains like in the S&P and almost 80% plus, and a broad index only like in the 25% from a total return perspective. So very different returns last 5 years and 10 years, similar story. So I do think that you can say if there's some mean reversion in global markets, and just from a pure valuation perspective, I would look there. I think from a longer term perspective, we launched these ex-state-owned enterprise indexes that get you more aligned with the private shareholders, a little bit less government involved, and that does tilt you to these tech and consumer type exposures. So for China, CXSE is our China ex-state-owned enterprises, and for a broad EM, XSOE is the broad ex-state-owned enterprises. So there's this element of tilting you to the sectors that we believe long-term, will reflect better growth opportunities, but then align you with more private investors and the government. And that's, I think, really one of the best ways to own those markets.
What was the first ticker symbol again? I got the XSOE. What was the other one? The WisdomTree one?
CXSE is China ex-state-owned. Yep.
Okay.
I want to ask you, Jeremy. We talked briefly this morning about the headline from, I think it was Friday or over the weekend. I don't even really remember now, that North Korea is going to relax on the nuclear missiles for the time being. And I wanted to get your thoughts on not that headline specifically, but how much time there are headlines like this every other day. So how much time do you spend thinking about these headlines as they relate to the markets, or do you sort of shrug them off because there's so many of them? So how do you negotiate that with regards to your job?
And from building an ETF and strategy perspective, we do a lot of fundamentally based work, and we're bouncing back to fundamentals like earnings and dividends on an annual basis. So our broad investment strategies are designed to keep these emotions and these type of headlines out of the process. We're rebalancing back to fundamentals, and so we don't really trigger disciplines like that. Where those conversations come up more is really whether on an asset allocation perspective, building global portfolios, and then sort of overall sentiment in the market, and also I'd say what gets influenced on this is macros, is currencies. I mean, after all those discussions last week, what's the number one thing moving in the markets today, this morning? It's the dollar. You see rates pressuring higher. You see the dollar strengthening. And, it's the exact reverse of what happened in 2017, where you had a very, very weak dollar despite rates rising. And so some of that, I do think, boils down to the geopolitical trade questions or those other big North Korea questions. And so it does influence my thinking about the markets. Now, what does it do in terms of building strategies and products? Much less. But in terms of thinking about the risk sentiment in the market, I think that it does have a overall important tone to the market.
We're on the line with Jeremy Schwartz. He's Director of Research at WisdomTree. Jeremy, I just want to talk to you about just kind of the overall reaction to earnings this quarter. Kicked off with the banks, pretty good earnings from JP Morgan, Bank of America, Goldman Sachs, but they weren't rewarded. And is that something that's concerning to you?
Well, I think, going back to these macro level drivers of what's happening in the market, there's the S&P through Friday, basically flat more or less. But there's really big dispersion in returns, and what's getting hit year to date, at the bottom end of the sectors is consumer staples, telecom, REITs, utilities. What do they all have in common? They are the most interest rate sensitive sectors. Rising rates, the bond proxies sell off. And so you've had the 10-year go from 240 to 296. This morning it was touching 3%. That's a dramatic rise in the 10-year. And so it's more cyclical sectors doing well. Now, financials, you could say, do tend to do better during rising rate scenarios. They haven't fully participated in that. Maybe they started to expect some of these rising rates already. But, I think from a high level, what the market's confronting with this year is you do have a very, very positive earnings environment. You have the tax changes that are starting to fuel into a general increase in corporate profits. S&P that I follow closely on putting out projections, last year, trailing 12 months operating earnings at the end of the year was $124 for the S&P 500. This year, they're looking at $155, which is a 25% increase in earnings. Gets you PE ratios instead of 22 times backwards, you're at 17 times if those 2018 projections come forward. And this is people who think the market's dramatically overpriced at 22 times. At 17, it's a pretty reasonable normal multiple. So that's the large issue we're confronting. And then you have this rising rates, which has historically, last 6-7 years, we've had no competition for stocks. The more rates rise, the more people say, well, maybe I could de-risk my portfolios a little bit, and there's more competition on the fixed income side. So I think that's one of the overall challenges we're going to face all year. That's the dominating story.
And also, just looking at it, the markets have had some great runs over the last couple of years. And I don't think one thing people prepared for are a trading range or a prolonged trading range. Could just be the way the market's going to be for the next 6 months, a year and a half, just kind of calming down and digesting the gains. And if so, how do you navigate those markets to still get some good returns?
Yeah, I'd say, yeah, I think as rates creep higher, that's going to be the major competition for stocks. And so you're going to battle this strong earnings, and earnings are going to keep stock supported, but the rising rates will create some anxieties. The Fed getting too tight will be one of the narratives people are confronting with. And so positioning in sectors that tend to benefit from that, so I'd say, where do I like the market from a pure valuation perspective, from a low PE multiple, from stocks that tend to benefit from rising rates? I think U.S. small cap, our small cap earnings strategy, EES, is one of those strategies that does well during rising rate environments. I've seen that over the last decade. That strategy has been out there. It's done well during rising rates. This year, it's done well with the rising rates. And then the second one is Japan. So Japan's been really out of favor this year, partly because you had a very strong yen. And if I go back historically, what is more sensitive to rising rates than U.S. small caps? It has been Japan. Now, that hasn't been the case this year so far, partly because the yen's been so strong, which I go back to, well, why has the yen been so strong? And I can't really explain it to a large degree. So I'd say those are two markets that are defensive to rising rates. And I think the valuations, when I look at Japan's broad global markets at 12 times earnings, you have declining trade tensions, you have declining North Korea tensions. To me, that's one of my favorite markets today. But if you're saying back to U.S. core equity exposure, I'd say things that help manage volatility. Now, a lot of people have gone to min variance, low volatility strategies, which ironically are getting hurt this year because of the rising rates. They have a lot of interest rate sensitivity baked into it. So I tend to look at option strategies. A put writing strategy is one that helps sell option premium. Collect that option premium is another way to own the market. During flat to choppy markets, that's exactly when you want these type of strategies. And so PUTW is our S&P 500 put writing ETF. And then we launched one for the small caps. We're also 2000 put writing. Our put is the ticker. Our PUT is that one, sort of a newer ETF. But I think those option strategies, when you have choppy markets, flat markets, that's exactly when you can go from just owning the equities to collecting the premium on writing options.
Last question here. This is from our chat, actually. Do you have any thoughts on if there is inflation on the horizon?
Commodity prices are starting to get firmer. That's been one of the key conundrums for the Fed is, where is inflation? We have the lowest unemployment rate we've had in over 2 decades, and we haven't seen real wage pressures yet. And so that's what the Fed is watching. And you're starting to see a little bit creeping up. But the support from commodity prices, I think, is going to start to feed into that. And so I see a little bit more signs, but we're all still watching. When will the low unemployment start feeding to inflation more broadly? And it just hasn't happened. But it's starting to think the Fed seems to be going from a little bit more unconfident of that, and they seem to be bent on 3 to 4 times hiking this year because they do see inflation coming. So that's the current sense from what I'm reading on the economy.
All right. Jeremy Schwartz, Director of Research at WisdomTree, has been on the line with us. Jeremy, thank you so much for the time today, and have a good one.
All right, S&P futures hanging in here, up 475 at 76 and a quarter. This is a little bit of an interesting area to me for 2 reasons. One, we're right here, mid-range on the session at 75.75, and also a number I like to calculate your daily pivots right here too. So nice setup here off the open. We can hold here, get up there, the test of pre-market high. If not, that pre-market low looming at 66.50 and your huge level on the downside, 26.60. It's not often that you get your Monday and Friday lows like right there in the same area. Another thing I want to alert our traders to is last week, I mean, we did a lot of chopping around and everything, but we only had a 59-point range. So a 59-point range. So volatility coming in a little bit here. Crude down 88 cents at 67.52, showing some weakness here in today's session. Dennis, are we going to pick up, Bob, with some earnings that we have after the close, or you want to go back to our ratings?
Let's just finish the ratings because there was a few more. So we'll just fly through these because about 4 or 5 more I want to talk about. Michael Kors is catching an upgrade at Deutsche Bank here this morning. We got ExxonMobil catching an upgrade at Raymond James. Verizon catching an upgrade at Barclays. Zillow, this is a big one, catching an upgrade at Macquarie because Zillow's been going straight down since their numbers. An analyst coming out and defending them this morning. So Zillow is trading up in the pre-market. Again, ZG or Z is the symbols on those. Under Armour, another one that has 2 symbols, UA or UAA, upgraded at Deutsche Bank. And Lululemon getting downgraded at Needham. Lululemon has been a monster. Not so much this morning, giving back a couple of bucks. And then one of note here, and this is a smaller one, just an initiation, but Veritone, VERI, a stock we talked about a while ago, which has given back its entire gains pretty much when it had the big run to 70. It's back at teeny bopper stock here now. It's catching an outperform rating from Cowen with a price target of 30 and starting to show some life. I've been playing this one through ACTG, which is Acacia Research, because they own a pile of VERI. So that's the way that I'm invested in this one there. But talk about this VERI for a minute. Just, give us the recap here because it was, stock that was trading around $8 or $9. Then it got a little lift, and then the Barons gave it the love, and it blasted off in the middle of, September, last year. It blasted off to over $70 a share. Pretty much come all the way back down here now. Thoughts here as we're back to where we came from originally.
Quiet consolidation here. I mean, you had to run up off the low. You had to 1233 low, and then you tried to make another stab at it in April, only got to 1275. This is $18. We are trading up $1.18 and 1823, right near the highs of the pre-market session. Let me check the volume. Not bad volume. This is not a heavily traded stock, but you just got to be aware you had a high at 1835. That was a week ago today, last Monday. You had another high at 1820 on April 11th. And then you had a big green candle and you got up to 1819. And next day you were $4 later. So the longer this hangs out in the 18 handle off the open, the more I think it might be primed for a nice breakout. But man, if we don't hold 18 early,
big level.
Yeah, it is. It's a nice level and currently trading above it. But let's see what happens when the major.
A lot of air above it.
Yeah,
and this could be the catalyst. Cowen is influential. They're given a $30 price target. This could be the catalyst to get you up over 18. The stock has been getting some love here just in the last recent weeks because obviously it was down to $13 at the beginning of the month. So it has been popping up here. I could see a run to 20 if it could get above 18 there and hold. But this is a big test for it this morning. Agreed, Joel. 18 is huge level.
Yeah, and but how often do you see like, we're upgrading it to 30 and the stock goes to like 27 the same day or something crazy.
They don't do that.
Yeah.
It takes some time. And these are one-year price targets typically when the analysts come out with them. And this is not an upgrade, just to clarify, just an outperform, initiating an outperform, but with a price target of $30. So they are a bullish stock. There's not a lot of pure, like, when you start looking, at the augmented reality, there's just not a lot of pure plays out there. I mean, Facebook and Amazon and Google are all going to be a big part of augmented reality going forward. This is kind of a pure play on it, but it's such a small stock that you don't know if they're ever going to be able to make money with it. So they got a lot of irons on the fire, Veritone. I researched back in the day. I just don't know. It's impossible to know if this is going to be a player in the industry eventually, or if it's it's going to be a stock that fizzles out eventually too.
It needs to make some money. You mentioned the Michael Kors. That's trading up $67 at 67.10. That was only 17 shares. So be careful on that.
But upgraded though. So, and it is bid there at 67.10. So nobody's hitting that bid, which is telling me that it wants to go up. Deutsche Bank is influential. Michael Kors is a bigger beta stock. 2% seems right for me on that. Oh, actually, no, it'd be up more than 2%. So, yeah, maybe you're starting to get little words to the top, and you're probably pointing out that high from last week.
Yeah, exactly. 67.33. You hit that on Tuesday. 67 even on Monday. So very, very, very important for this to hold up in the 67 handle. Above that, if you're looking for this thing to really run today, you hit a high of 69.95 back in February. 2 days later, it must have been an earnings report. You were down at $60. So getting into a wide open area here, if it can hold in the 67 handle in the cores. You mentioned Verizon. I know you're not happy about this one. Verizon.
I had a short coming in, and it was just an overnight short. But it seems like I've had some bad luck with overnight, longs and shorts, and it seems like it come in. And I trade 20, 30 stocks overnight every night. These are overnight trades. And, there's a number of reasons. A lot of times 2-day move. We know I talk about the 2-day move. I like that. Maybe there was another reason. Maybe it was something set after hours. I'm not scared to trade after hours or something. Lots of reasons to be in overnight positions. But, when you see it come out, you're like, when you're short something, it gets upgraded the next day, you're like, that's a bummer, because it's going to be pushing in the price quite a bit higher here. So I am short Verizon right now for an overnight trade. I will cover it here today. I don't know if I'll cover off the back, because 1% seems even like a little bit of a lofty move. It seems about right, I guess, for Barclays. But the candle was ugly on Friday. And we do have the TLT still trading a little bit in the red, which is a catalyst as well. AT&T is trading up, and those two stocks trade together. But there was other news on Friday, too. Both of these stocks had some, bad news or some nervous news coming out that there was some investigations going on from, I can't remember what the headline was. Spencer, I'm going to throw you under the bus here, but there was a headline broke on Friday, just in the afternoon. You can see the big whoosh in the chart on Verizon from $48 almost down to $47, and something investigating for collusion or something.
Yeah, we had some potential antitrust stuff. The New York Times reported that the DOJ was looking into AT&T and Verizon, just those two, I think, over potential collusion to make switching carriers harder to do.
And that's why and it popped all the way back up, and I was kind of wanting to be short those going into the weekend, because I didn't know if anything would materialize from that. It didn't, which is obviously, and then it got upgraded in my face.
Well,
so
it's been 3 days. Give it some time. That was
that's what. Yeah, but usually over the week you wonder if something's going to work. But yeah, and sometimes these things come back out over the weekend. Maybe I should give it some time. Maybe this is one that I shouldn't consider. I know Jason Rasnick, if he's listening there, he had the best call on our show, and this thing was at 54.5. I'll give you some more props, Jason, because Jason should be a trader, man, because he makes great calls. But 54.5, the stock was trading the pre-market that one morning on their earnings report, and he came on the show and saying, I think it's a great short up here, and stock's been straight down ever since. So I guess we should get the Jason Rasnick indicator and say, what I should do with my short position here in Verizon, if I should stick with it or if I should cover here this morning.
$49. That is the Rock of Gibraltar here. You hit it 3 times last week. I can give you the exact numbers. 904, 906, and 996. So until this breaks out and clears 49, I think there's going to be some selling pressure on it. AT&T, that got hit yesterday. Made a new low of the move below the February lows and below the March lows. What's going on with AT&T here? 34.15 rebound.
Elusive activities, apparently.
What's going on with that merger?
With merger with Time Warner?
They're in court.
They're still in
they're still in court. I think it's supposed to finish up in the next few weeks, actually.
Is that?
Okay. Yeah.
But that's been going on forever. The TWX is just waiting to hear their fate, whether they're going to be part of Time Warner or not. Yeah. So I can't see them. Do you think they're going to block it? I don't think they're going to block it in the end. They give them a hard time, but I think it's going through.
I have to agree.
I
put it at like 70-30. It goes through. 75-25 maybe it goes through. But yeah, I can't see them blocking that. But was there anything else that we missed, or are we set to wrap up today? Do you guys
covered a lot here? There's a power hour there. Remember, the Sohn conference is going on right here now. Today. Yep. There will be hedge fund managers talking their positions. Obviously, that is going to be influential. What time does that start, Spencer?
It already started. It was at 8, and then it goes all through the day, through the market close until like 7, I think. So
keep an eye on your Benzinga Pro. They will be monitoring it and covering the stocks. As you know,
we have somebody there. We actually have somebody there right now. So we will be posting from the conference. But,
we'll get those out there on the Pro as obviously stocks are mentioned because it's going to be influential.
Yeah, for sure. Joel, any final technical levels for the morning?
No, just hanging out. I think it's really important to hold these gains here off the open. Get up there and test that pre-market high 84.75, and not often on a Monday do I give you like a level for the week and I say, this is a level you got to watch. Well, I'm doing that today with the 20-60-60 level. You had the old Monday, Friday low trick. Nice rally off those lows on Friday. Continued into pre-market, but leaking here. So 26.60, we'll be watching that through the entire week.
All right, folks, before I let you go, I'm going to remind you that the Benzinga FinTech Awards is coming up May 15th and 16th in New York City. If you are going to be in the area and you want to attend, I have a discount code for you. If you go to BenzingaFinTechAwards.com and sign up with the promo code PMPVIP, as in Pre-Market Prep VIP, you get $200 off, and that brings the ticket down to $297 with that code. That code expires the end of this week, actually April 27th. So that code is valid for the next few days. Again, PMPVIP, BenzingaFinTechAwards.com is the URL for that site. So thanks to our guest today, Jeremy Schwartz. Thanks to all of you who joined us in our chats. Hope you all have a good morning, and we will see you folks on Tuesday.